You may have heard about self managed super funds from your friends and family and colleagues, but you may have never done anything about it. The idea behind this video is to actually help you understand. And so, therefore, I'm going to take you through this education piece. Uh, and once you've gone through that, you may get a better idea and it may encourage you to do something. I think the most important thing is that this is just general information. And if you are interested to do something about your superannuation, you must seek the advice of a financial planner. Please don't act on what I'm telling you, as this is nothing else but general information. What you need is something tailored to your own needs. So let's launch into it. Self managed super funds. Why are there over 600,000 funds in Australia? About $692 billion is under self managed funds. And that's of June 22. And why is that? The reason is, I believe, it's control. As a trustee of your own super fund, you have control of what you do with your own money. You can track your own wealth, and you have more confidence in your investments and your lifestyle decisions. The choice of investment is yours. Trustees, you as a trustee can basically invest into direct shares, high yielding cash accounts, term deposits, income investments, direct property, unlisted assets, international markets, and collectibles, and much more. There's also a tax strategy involved in accumulating. In the accumulation phase, SMSFs benefit you from concessional tax rates. And a good tax strategy can help you grow your super and reduce tax payments as you transition to retirement. There's also flexibility, and it's transparent, and the cost can be lower when you are adding multiple funds together into one. The more an SMSF grows, the more cost effective it becomes. So currently, SMSF laws allow a trustee to combine superannuation assets with up to three other members. So a family can get together, husband, wife, son and daughter-in-law, or two groups of friends can get together and create their own super fund. Now, how do you do this? You should really uh, appoint a team of people to help you, because it's not easy to do this on your own. I wouldn't recommend it. I recommend you appoint a team. The first person, of course, being a financial planner who's going to help you make financial decisions and plan for your future. You will also need the accountant and some legal advice to set up the documentation. And the accountant will set up the actual fund for you. He'll set up the accounts, he'll do the rollover, and he will do the auditing and make sure that all the trust deeds and all those documents are in place. You possibly need to have the help of a mortgage broker or a buyer's agent to help you make selection of the actual loan itself that you will need to maybe buy the property. Possibly you won't have enough funds in your account to outright buy a property, so you may put in a certain amount of your own money, and the balance could be funds that you receive from lending. And then in the selection of the actual property itself, it's always recommended that you have someone who knows how a self-managed super fund works and will select for you, help you to select the right property. And he will liaise between the developer, the planner, the accountant, the trustees, and will make the property selection and make sure that it meets all the criteria of price point, your rental yield, capital growth, cash flow, and location. So these are the people who you should have on your team when you go out to set up a super fund. A typical super fund structure looks something like that. That may be a complicated looking diagram, but it really is not so. We can explain that to you. I'm not going to labor it, but if you do want to actually have a proper presentation, then we can go through this in more and make it more relevant to your discussion and your decisions. The operating of an SMSF, what needs to be done when you start, of course, you've got some key events that will take place, which is basically appointing the trustees, the trustee, the bank accounts, investment strategy, and a plan for the end. The operating of an SMSF is really how you roll over the funds, making sure your employer contributions come into your own fund, what investments you choose, and to review your investment strategy at all time, and maintain records. Every year, of course, you have to do some key events, which is to value assets. Your accounting statements need to be in place. You need to have an appointed auditor to look after your fund and to audit it. Annual returns and SMSF levy, and you need to possibly pay some tax. And then when you sell at the end, at some point of time, you may sell a property, or you will sell a property for sure. Then you need to have the sale of assets recorded, a minimum payment set. You have to appoint an actuary. Withholding tax needs to be kept, and payment summaries to be maintained. Well, what's the cost to set up an SMSF? Well, it's approximately about $5,000 would be the initial cost to set it up. The running cost every year would be between 1,800 to 2,200, and there may be a bare trust setup cost and an audit fee. So this is how the costs are, but they are about. They would be possibly less than what is costing you right now with your own fund, but that's something that has to be looked at in more detail when you set up a fund. So what's next? Whatever you do, it must be independent advice that you receive. And if you are interested to do something about this, your superannuation, and to set up a super fund, please do click the link below and contact us. We can definitely help you with this, and we would be looking forward to meeting with you so that you will have control over your money. Thank you for listening.